Good morning, everyone, and welcome to the morning homework session and trade plan setup with Quantum Leap. If you're visiting us from Twitter or you're watching this on YouTube, Quantum Leap is a self-organized learning environment. We have been in existence now for over 4 years. We're a private Skype room. It's not a commercial venture. If you're interested in coming and checking us out, we come together to talk about the market each day. You can send a Skype request. You will need a Skype account, and you can send that request to Doug_McKay. I'll be the one from Windsor, Ontario, Canada. So each morning we come together and talk about what the market's done, what the market's looking to do, and talk about the probable rotations and set up our trade levels and our targets for the day. Before we get going, I have to get the legals out of the way. So this information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk of loss. Please consider carefully whether futures or options are appropriate to a financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own plan, do your own due diligence. Okay, with that said, let's go take a look at the numbers and see anything that jumps out. We like to take a look at the macro to the micro. Two numbers that I think are extremely important and relevant right now is obviously that 1837.75. We're now way below that. But we now have a year low down at 1767, and the bigger number I'm watching is the one below, which is the previous month low at 1754. We are seeing some weakness come into the marketplace. This is nothing overall in terms of the larger trend is still intact, but we have to look at the possible rotations and retracements and where we can see where the buyers are going to find value and step in. So yesterday we opened the market right at 1781.75 in the Globex, for the week. And of course, as you all know, all last week we were talking about that, that microcomposite VPOC, the most accepted price in the balance that we had broken out of and gone higher to make those new highs, and that the likely spot for them to come down and find buyers and advertise for buyers would be that 1781.50. And of course, on Friday we closed right at that 1781.50. So we opened the Globex at 81.75, had a high at 92 and a low at 76.25, and then we opened the RTH session yesterday at 1786.50. And you can see that we've got a couple days now of lower lows on all the Globex numbers. We opened auction in range and we broke the IB to the low side. We did a make and break. I want to talk about that this morning. Seems to be coming back into play. When you see the weakness coming in, usually you're going to see the IB get broken early on as the the sellers put the pedal to the metal. Our initial balance high 91, so we missed that high of the Globex at 92 by about a point, and then the initial balance low 1776 for a 14 point range in the initial balance, which obviously was pointing to some more weakness. And then you can see that all our intraday numbers were all lower numbers. Although, again, the interesting thing is, remember that balance and acceptance is still in around that 1781.25 or 81.50, and you can see that our RTH VPOC was that 1781.25, just one tick off of balance. So they, overall, even with the rotations that we saw to the lower side yesterday, the most volume that went off was still right inside a balance and inside that value of that microcomposite that reaches from that, I believe it's November the 14th through to December the 19th. But we'll take a look at that when we get to the composite chart. But we do have some weakness showing here with these trends coming down. Our value area high and low again was lower for the third time. So value is being accepted lower between 1787 and a quarter, the value area high yesterday, and 1774.75, the value area low. And you can see, in the last few days, as we've been seeing this weakness come in, you can see that we're back inside of that pocket for the make and break of the initial balance. And this is indicative of a weak market because usually, weakness will show up early in the day. And, we just saw some more weakness come into this market with the durable goods news at 8:30 Eastern Time, 7:30 Central Time. And we've actually come back down from where we were trading overnight. And then our extended sessions were all lower, and we had heavier than normal volume. When the market gets weak, people panic, and that's what accelerates the trend down, and that's why you're seeing that the volume is higher. So let's go over to the daily report. The full session high is the Globex high currently at 1786.50 and the low at 1770.75. That gives us our 20-day ATR targets for the day. On the high side, 1788 and a quarter, and on the low side, 1769. I think we'll actually see some extension most likely today. Let's take a look at what we've got for news. Of course, if anybody's not familiar with Quantum Leap, each night we put out a what we call our QLTP, which is a ladder above the previous day close and a ladder below the previous day close with all of the key levels from the different methodologies and the different studies that we pay attention. And that comes everything from floor pivots, support and resistance, Fibonacci's, key numbers, volume profile, naked crosses, some proprietary stuff that we do. And then we put this out each day with the news. You can see we had core durable goods, showed a little bit of weakness coming in. And then coming up in the RTH session, be careful the first half hour because we do have consumer confidence. The bigger thing that you got to pay attention to this morning is that we've got the start of the FOMC today. So you got the two-day FOMC, and if we get any leaks about further tapering coming out of the FOMC meetings, I think you're going to see some continued weakness coming in, and we're going to go and take a look at where I think they're going to find some value and support. So let's go over to the macro to the micro trend charts. You can see that the monthly, of course, has been extremely strong in the last 2 years. We did not close below. I watched two different moving averages. I watched the 20 EMA and the 20 SMA. The 9 EMA and the 20 SMA on all my charts, and you can see that over the last 2 years, in 2012 and 2013, we never closed below the 20 SMA, and we only closed below the 9 EMA once. And all of 2013, we didn't even really challenge breaking below the 9 EMA. It's just been incredibly strong, and at some point in time, we've got to see a pullback. So you can see the low from last month is down here at 1754. We're currently trading in the lower distribution from last month. A test of the 9 EMA from above is going to bring us down into that 1712 mark. And even then, that does not, constitute a trend change. It still maintains that the overall trend is up. Going over to the weekly, you can see that, you got a little bit of weakness. We got a possible little, head and shoulder pattern showing up here on the weekly. We've come down. We've broken below the 9 EMA. We've tested the 20 SMA, and right now we're trading in between the two, what I call MA squeeze. So, the key today, I think, is holding above the 20 SMA on the weekly. If we break below, there's some targets below that are likely to go get hit. But overall, again, same as the monthly, even though we're seeing a little bit of weakness coming in the weekly, the overall trend is still intact on the weekly. Going over to the daily, Well, you can see we've got some weakness coming in on the daily. And we've got a really nice technical gap here. And a technical gap is when the market moves too far away from the 9 EMA, and this can happen on all kinds of different time frames. But the gap will be closed. Now, the gap can be closed by time, where we just go sideways and the 9 EMA comes down to catch up, or through price, where the price moves up to close the gap. Usually it's a combination of both. And so right now we've got this technical gap, and if we hold below above this 67 level, I'd be looking for us to come up and close the gap. And I think the gap is going to get closed, believe it or not, somewhere in around that 1781.50 area. Not surprising. I also wanted to point out again, and I'm going to point this out on a couple different time frames, is those naked crosses. If you're not paying attention to the naked crosses, start tracking them, because they're very powerful. You can see we've been talking about this naked cross down at that 1795 level for a couple weeks now. We talked about that it was coming, and you can see it came down and took out that naked cross. In fact, if I go over, a good one to look at is this 30-minute. Or is it 30-minute or the 15-minute? You can see we had a naked cross right here, and we just came down on the news and took out the naked cross. Go to a 15-minute. You can see here's a naked cross, came down and took it out. So, for those that don't know what a naked cross is, it's a proprietary study that I developed, a couple of years ago. Been tracking it, very accurate. I use it on the 5, the 15, and the 30-minute intraday to give me direction and probable rotations. And it's where the 9 crosses above or below the 20 SMA, and the price action moves away strongly. This is a perfect example of one right here at this spot. The market came down, the 9 crossed over, price moved away, and well, actually we even created a technical gap at the same time, but eventually the market rotated back up and retested that level. Basically, it's unauctioned territory. It's like a naked VPOC or a naked microcomposite VPOC. It's an area of the auction that needs to be retested, and the market has a very high probability of coming back there. Let's take a quick look at the geometric chart. We've been following these 3 Andrew's pitchforks, the long-term fork we've been watching for quite some time, and we finally came down and tested the lower line of the longer-term fork. We had this opposing downward sloping fork that we had this energy point right here. And where was that energy point? 1781.50. And we weren't really due to hit it until the 29th, but we came down and tested it, and of course we're trading around there, and we're likely to chop around here for the next couple of days. If we get below the, we're coming up and trying to get back inside this longer term upward sloping fork. If we reject it from below, this is a normal retest, and we fall out of this longer term fork, look for them to come down and test the lower line. And believe it or not, that's going to take us down into that 1730, 1732 area. So that would be my extended target today. If we can get back up and stay above the lower line of the upward sloping fork and the center line of the opposing downward sloping fork, then I'd be looking for a move to come back up and test the lower line of the intermediate fork right here in around the 1800 mark. But that to me is more likely a hypothesis number 3. I think we're going to get some more distribution and chop inside of this level. So let's take a look at the bigger picture and take a look at the composite chart. All right. So for between the November the 14th through to December the 19th, we were chopping around in this distribution zone, basically between 1806.50 and 1764. And the most accepted price overall was this 1781.50, which is the microcomposite VPOC, or the most traded price, or the accepted value overall for that period of time. And we've been talking for a while now when we were up here. We came down a couple times to test, the lower range of the balance up here that is around that 1832 area. But I said if we fell out of balance, we'd look for them to come down to this 1802.50 to find buyers. That's where the last most accepted price was just before they broke out of the overall balance here. But if we couldn't hold the 1800s, that you'd have to have everything looking towards coming down to the 1781.50 because there was nothing there. There was no value that they had found in between those two levels, between 1798 and a quarter and the 1781. And it was a quick move down on Friday to come down and test it. They found value there and held it on Friday, and now we're just chopping around this distribution and testing both sides. My extended target for yesterday was at 1764. We didn't get down there. They found buyers down at 67, which is right around this level right here, which is the 1769.50 area, which is where they came down and held value before moving up. So right now I'd be looking at that 1769 area. Actually, on our full session ATR targets, that 1769 and a quarter is our ATR target. Value area low for this overall area is 1772 and a quarter, and value area high is 1796.78. But I'm expecting a lot of chop today in this area around 1781, with an upside target to the other side of balance, and the value area high between that 94 and a quarter CLVN and this 98 area is my upside target. To the low side, I'm looking between the 69 and a quarter, 69.50 area, and a push through to 64. 64 now becomes a major line in the sand, because if we get below 64, we're outside of balance, we're outside of value, and we're likely to come down lower and advertise price down into this next lower distribution, which is centered around this microcomposite VPOC, which is still naked at 1752 and a quarter. But if we can hold above 64, then I think we're just going to get some chop in this area today as they start to consolidate and find value again in this distribution zone. Keep an eye on this 94. If we get above 94, then I'd be looking for a move to test the range, the value area high, and see if we can come up into the 1798 and challenge the 1800s again. And then above 1800, immediately look for a move to 1802.50. I'd get long above 1800 into that 1802, and a test of the range high for the microcomposite up here at this CLVN at 1806.50. So let's take a look at our overnight and start moving our levels over. We've got an Globex high, overnight high, up at 86.50. And that 86.50 is just below yesterday's value area high. That is at 1787 and a quarter. The overnight low is 1770.75. and that's just above the range low at 67. And then our current VPOC, this could shift, but not likely based on what I'm seeing volume-wise at 1784.75. And get rid of this. We don't need this anymore. So our gap close for the day is 1773.75. We're trading, right inside around this balance. I'm expecting anticipated chop this morning. In fact, I'd be very careful trading, out of the gate this morning. We're likely to chop around here. Obviously, I'd be looking for us to come down and close the gap and test the value area low down here at 1774. See if we can find some responsive buyers down here to hold us inside of value, rotate us back up through, take out the naked VPOC, test the VPOC from overnight and value they found overnight, and push through to take out the overnight high and test the value area high up here at 17. Sorry, I'm having trouble seeing on this screen. It's a new screen. 1787.50 to complete the 80% rule for the value area and the 96% rule for the overnight high. If we break below the 74, then I'd be looking for us to find more weakness coming in to the marketplace and come down and test this, take out the overnight low at 1770.25 and test the range low at 67 with a push through to 74. So the way I would trade this is I would be trading off of this level right here at 1774.75, looking to see if they come down, close the gap, and find value down here for the buyers, and then rotate us back up through to test the overnight high and the value area high. If we break below there, then I'd be looking for them to come down, take out the overnight low, and test the range low at 67. So I'd be doing business down here at 67 as well. And then a breakout of range, breakout of value, and a move down to test the, what I consider to be now the key line in the sand, which is down here at 1764. And that's going to be my first target outside of the range. And of course, that will also be another trade area, because if they can't find value there and keep us inside of this distribution, then I'm anticipating a lot more weakness and a rotation back down into this distribution. Now, as I mentioned yesterday in my video, that this area has a lot of undetermined fair value. So it's going to get choppy when we get below 64, and I don't think it's going to be just an immediate move down there. We do have this, this naked VPOC down here at 1756, so that's going to be my secondary target below us. But below 64, I anticipate it getting a lot of smaller rotations with a slow grind down to 52. I don't think it's going to be like the move we saw, with 81.50, the move on Friday, where there wasn't really anything there to, to hold us up or slow us down. I think this will be more muted and will come down, will break below 64, and will sort of chop around in this zone with a downward rotational skew down to this 52.25. And then the other side of that balance is down here at this 46. So that will be an area I'd be looking for them possibly to push through to, and then responsive buyers stepping in to hold us up. Now remember, we were talking about on the monthly that we can come down to that 20 SMA and or is it 9 EMA, but that 1732 to 1730 level is the next big level below this distribution around 52. I don't know if we're going to get there today, but anything's possible when you've got possible headline news coming out of the FOMC. So this will be an extended target down here at 32 as well, just for the amount of weakness in the range expansion that we're seeing, 32.50 to be exact. And then of course you've got a naked VPOC down there too at 27. If we get inside and hold inside of value today and continue to trade around this 1781.50 distribution zone, then again, like my main hypothesis is to do some more chopping in this area inside of value, probably even see somewhat of an inside day with a test of that upper area around 94 and 98. So right here at 1787.50 is an area that I'll be looking to do business, because I'll be looking for those value area sellers to step in and hold us into value. But if we break out, then I'm looking for a move up to test the range high at 91 and a breakout above this 92 and a quarter CLVN right here. So I'll be looking to do business in between the 91 and the 92 and a quarter. In fact, I'll probably take the breakout of the I would take the breakout of the 91 for the move to test that 92 and the other key area above us, which is this 94 and 94 and a quarter, because that's the lower side of balance around that 98. You can see that 98 naked VPOC, and it was a former microcomposite VPOC, and the CHVN there at in this distribution here. So that will be my target, upward target outside of range there. And then the extended target is going to be up there at that 18. Actually, it's going to be a little bit higher at 1806.50. And it'll also be a trade area. And then if we can get above there, we've got a major target still above, with that naked close at 12 and a quarter and naked VPOC. So let's take a quick look. I know I'm covering a lot this morning. If you look on the Renko with Keltner, test of the center line is 1779. That's basically right in this key distribution area around that 81. Above there, a test of the upper Keltner will take us to 1784, which takes us back to the overnight VPOC, and testing probable test of the overnight high. We are continuing to see a little bit of weakness, and we're holding below the Keltner center line. A test of the lower line will take us down to 1773, which is going to give us a test of that value area low. But remember, we got news coming out at 9 Central, 10 Eastern, so be careful on the open trading. Let's take a quick look at gold. Gold, as we talked about yesterday, we were talking about it just chopping around in this area. If it couldn't get back above this 65 to make another run for that 72, 74, and 82 level, that we're likely to come down and chop on this, in this distribution. This is a pretty blunt profile composite. The big number below us right now is that 1241, 1242 area, just like we've been talking about. So if we can't hold 54.80, and I'd be looking for a rotation down towards here today to see a little bit of weakness down to the 1240, 1242 area, with that 37 coming into play again that we were watching. Look how many times we've found value in this this 37 area and moved back up. If we can hold above the 54, then I'd be looking for rotation back up into balance in the current microcomposite VPOC at 61.10 with a test of that 65 again. And then if we get above 65, 72, 74, and 82.30 with the other side of balance being up there at that 1299 or 1300. So that's what I'm looking at today. Howard's not here today, so this is going to conclude our morning homework session. I'll go ahead and post the charts in both rooms. And as always, trade well, trade safe, and we'll catch you on the flip side.